All right, hi everyone. Welcome to Synergy Traders number 17, Day Trading Strategies. And we are recording this on August 20th, starting at 10 a.m. Eastern Time. And so we have a great lineup for you today. And I have arranged for the option professor to be here to be the opening act today. So I'm going to go ahead and turn it over to him.
Okay, thanks a lot, David, and welcome everybody. We've got a full slate of people for you to listen to. I'm very familiar with many of them, so you're going to, free of charge, hear a lot of good information from the standpoint of their research and also their experience, and they're going to show you a lot of different ways to approach the market on a short-term basis. Before we get started, I just wanted to say that there is a substantial risk of loss in short-term trading and option trading. It's not right for everybody, so consult your brokerage firm, your broker, and your advisor to determine your own suitability. And of course, past performance not necessarily indicative of future results. Use risk capital only. And of course, today I'll be sharing with you my opinions and my observations as I see the short-term trading that we're going to talk about. Okay, having said all that, we're going to go over a lot of information, so you might want to get a pen and paper ready because I'm going to be going over, like, spanning the globe, like Wide World of Sports. I'm going to be going over a lot of different sectors, and both from the stock and commodity spectrum as well as ETFs. So let's start out with some concepts and some viewpoints. You know, I've been in this thing for decades. My experience, I'm a graduate of Boston College. I went to UCLA for graduate school, and I've been in the investment arena here for decades. So I'm pretty familiar with all the different ways to invest, and basically the short-term trading. We're not going to talk about options, although that has been my forte for decades. On my weekly update and through my email, if you have questions on a specific option type strategy, I could talk to you about that. But today I'm just going to be going over taking positions, meaning short, long, and that type of thing. Now, when I'm looking at short-term trading, which day trading obviously is, I like to do different time frames. You know, whether I'm doing position trading or day trading or swing trading, I like to look at different time frames, so it gives me a perspective. You know, the perspective can be very helpful. Now, with short-term trading, I'm not going to go to the 20-year graph or the 5-year graph because obviously that's too much time perspective for this type of activity. But I do like to start out with something like a 1-year graph, and then crunch the time in from there to get my my viewpoint. So in other words, why would I want to look at a 1-year graph if I'm doing day trading? Well, because I like to get the idea of where the main highway is. The main highway is very important because it might give me an idea of whether this day trade has any substantial potential, or had I better keep it on a short leash. And if you're going against the overall trend, and the trend is not overbought significantly or oversold if I'm going the other way, then I'm going to be concerned about keeping the trade on a fairly short leash and use probably one of the shorter term moving averages to exit the trade or even enter the trade. So let me give you an instance here, and I'm going to go through a wide variety of stocks like I told you, and so you'll get an idea of how this type of approach would look on many different stocks. Okay, so here we go. Right now I'm showing you the S&P 500. And you can see right now we're looking at 3366, 50 down 625, bouncing around here. Now, I look at the 1-year graph, and what does it tell me? It tells me that this, according to my work, you got the buy signal down here on the short term at 2400. And pretty much that has been rising the entire time, which means although it got penetrated a few times, if the direction of the average continues higher, there's a likelihood that any break is temporary because the average itself is rising. So this thing got you long basically at around 2400 on the S&P, and you're still long up here at 3400. Not a bad ride. Now, if you want to use a moving average that is basically more smooth, you do a longer-term average. This is going to be the 45-day moving average. Pretty much got you long at 2,700, not too bad. And you haven't broken that thing on the whole way up. So that's quite a ride. And basically, that's why these moving averages I like, because they're based on time and price. They're not based on opinions or forecasts or Fed action or anything else. You're just following the flow of money. All right, so now we understand that the main flow of money still looks like it's to the upside as we speak. Now, we go over here and we go to the 5-day graph, okay? Because again, we're talking about ultra short-term trading, day trading, right? So now you go to the short-term graph of the 5-day, and you can see the moving averages all crossed here at 33.90. So your sell signal's right here at 33.90. You should be short this market at 33.90. Now, if you want to keep it on a short leash. Why would you want to keep it on a short leash? Because the market's major trend is up and you're going against the major trend, right? So that means you want to keep it on a short leash because it could violently come back in your face, which it's starting to do right now. So the bottom line is that if I had this thing short at 33.90, I would probably use something like the red moving average, which is the shorter term. And as soon as it got penetrated here at 33.55, I probably would say goodbye, take my money, and that would be that. And I'd wait for another opportunity. If I wanted to stick with it longer, I'd use the blue line, which is the longer term average. And that's basically being penetrated as we speak. But as I told you, the moving average is pointing down. So this could be very temporary. So I may grit my teeth here because it's just barely being broken. And it hasn't taken out the highs right there, which is what, 33.68. So it hasn't taken out 33.68 and it is still pointing down. So if I wanted to grit my teeth, I could do that. But since in day trading, you're kind of getting in and out and trying to grab money and get out of there, you know, getting out down here would have made more sense. But if you're still in the trade, certainly you're getting to a point where you're going to scream uncle and say, listen, I made some money here and I'm going to get out. Okay. So basically that would be the S&P. And again, if you were hitting it here, you know, for whatever reason, you know, you would probably let this thing only go to those highs there because this red line is already turning up. Okay. Now, that's on the 5-day basis. If you're day trading it, what does it look like? Okay, on the day trade, once it crosses the red line, you're getting a sell signal. Once it crosses the green, another sell signal, and once it crosses the blue. So your sell signals came at 33.65. Then you got another one here, 33.62, and then you got another one here at 33.60. Okay, now they all did cross to the downside right around here, but again, once it crosses the red, and why are you keeping it on a short leash? Again, because the major trend is up and you don't want to get caught on the snapback, which is what people are getting caught in right now. Okay, so here you got in on a day trade, a little bit lower than the 5-day. So actually the 5-day gave you a better entry point. And the day trade gives you an entry point right around here. And then basically you write it down and you're covering here at 33.57. So that gave you about 5-6 points. And now you're out. Okay. And if anything, you went long. Okay. And as you're long, this thing is coming up to 33.59. So if you did go long there down at the bottom, you know, you're moving your stop up and you're going to try to ride it as fast as possible. But again, it does look like it's having trouble a little bit at that 33.68 mark. So we'll have to see how that goes. That's probably a pretty key number today. Okay, so that gives you a little idea on the S&P. And again, that's the way that one would work. A lot of you guys trade the Qs. So let's take a look at the Qs. That's the NASDAQ, right? Okay. Let's see what that, because that came back pretty darn strong. I think that's up on the day here today after being down. Again, the main highway gives you the idea of what the major trend is. If you're shorting against the major trend, you got to be careful. Why? Because the major trend's up. Now, does that mean you can't make money by shorting against the trend? No, because markets get overbought, markets move back and forth. But if you do get profit going on the, okay, let's go to the 1-year graph on Qs, give you an idea. Obviously, this guy got you long here at 200 on the Qs, and you're still long, right? You're still long. So what's the major traffic on the Qs? Up, up, up. Now, I use RSI as well. And let's see here. RSI right now on this baby is coming in at 64, okay? But we're way up here at 277. So let's go back and see if that RSI has been rising as this market's been making new highs. Because if it hasn't, that's an indicator that this action here is more short covering and exhaustion, meaning the volume's drying up. So that's a sign that it could roll over from there. So let's just see how the RSI has been going. It's 64. Then over here it was 69. And over here it was 72. So, you know, your RSI is not making new highs and the market is making new highs, right? So that would be something to be careful of. This 280 mark up here might be very much as far as it's going to get. I'd be concerned if it started to break underneath like the red line here. It might give you a decent sell signal. Now, that's the 1 year graph though. We're doing short-term trading. So let's go to the 5-day. On the 5-day, you got a sell signal here at 278. Okay, but you notice it never broke the blue line here until right here. So it got you going on the short side, right? But you notice these lines haven't crossed. You see when they cross, like down here, that's a good sign that you might get a run because all the averages are crossing. Here you don't have that. So this move down here would be suspect because it is not being confirmed by all the averages coming down. So in this case, you might have got to sell at 278. You got this move down here, but since these things have not crossed, and you're going against the major trend, you might sell here and then bring your stop down initially to the 277, and then ultimately down to 276.50. And then you would have got kicked out there for a tiny gain. Okay, now let's look at the day graph. Is that giving us anything here? Not too much here, not too much information here. So basically, again, not much of a day trade here. So this would be a stand aside. There's not enough here to make any deal. S&P was a better deal to day trade so far today. Okay, so that gives you an idea of the major indexes. And again, you know, on an opinion basis, I think September and October are going to be very interesting because as I'm showing you, we're making new highs, but the RSI doesn't seem to be making new highs. That's a sign of exhaustion. And then, of course, we've had a very, very large run, as you can see from the graph. And we have used up a lot of the real, you know, a lot of the value of the Fed easing. And now earnings and GDP have to kick in at some point. And so again, as we go closer to the election and we get past Labor Day and gets past these splits and all that kind of stuff, it'll be interesting to see at these lofty levels, can the market sustain them? And only time will tell. Now let's go through some specific stocks and we're going to go sector by sector. All right, and let's see what they look like. Okay, the first one is communications. And in the communications sector, the big guy, of course, would be Google. And let's see what Google looks like. I'm going to try to burn through a lot of stocks here so you guys that are in some of these stocks can at least get an idea of what I'm seeing. All right. So on Google, let's take a look here. And on a 1 year graph, you know, and frankly, you know, the 5-day is very good to work with even if you're doing day trading. I find that. So that's my opinion. So I'll be showing a lot of the 5-day chart because I find that to be very effective. Okay, on Google, what do you got here on the 1 year graph? This market has been trying to rise, got bumped down here. But look, the moving average is rising. So you can say that if it gets penetrated, that it's possible that that will not last. And again, that's exactly what happens. Here again, you got penetrated, but it is still rising. So this thing is still coming in, and it comes in around 1493. You start closing under 1493 on Google, I'd be nervous. Now let's take a look at the RSI because we're making, you know, we're up at these high points here. So let's see what the RSI is doing. You know, similar to the other market, you when the last high was made, the RSI was at 67. Then it's been trading at on the next rally up, it went to 55. Right now, it's trading at about 61. So you're looking at an RSI that is not confirming, you know, this area up here. So you have to be careful. And I think these areas up here, just under 1600, if this market does not get above those levels and we hit September and October and you take under 1500, it could be an indication that we've had a high point. So be careful there. But let's see on the 5-day graph, could they have gotten a trade out of this thing? Let's see. Yeah, again, you know, the major trend is up, so you get a little bit of a sell here at around 1559, right, this ballpark area, but the averages have not crossed, so it's a powerful market still. Again, they cross down here, and look what the averages, what the market does. It gives you a nice run. I mean, that's a pretty good run from 1525 to 1565 on a 5-day graph. Okay, now again, down here, since obviously you're going against the trend, you get a short down here, it holds down here. You can move your stop down, you know, under the green line at 1550 at least, and at least you pick up what, 10 bucks almost? Nothing wrong with 10 bucks. Again, you got to be putting it on a short leash when you're going against the major trend, in my opinion. So that's the story on Google. Another communication stock would be Facebook. And let's take a look at Facebook. On Facebook, the market obviously had a big run up here recently. Let's just see what's going on here. Okay, it's up in the 265 area today. What's the long-term graph look like? Again, penetrated, but the averages never crossed. And then the bottom line is the market just temporarily was underneath it. Same thing here. Now you got a big jump to 280. Okay, a big jump to 280. And but the trend is up, no doubt. And then basically the RSI on that big jump doesn't seem like it really made any big highs. The highs here at 250. The RSI was, well, right here, the one high hit at about RSI 65. And now the RSI, as it's still trying to be up there, is down, well, it's at 65 here. So it was 70 almost there. So the RSI is not making new highs. You got to keep an eye on that too. All right, but on this 5-day basis, if I'm day trading, I'm short-term trading, let's see what I would have done here. Okay, sell signal came in where? Sell signal came in on the break here at 264. The major trend is up, so you're going to keep it on a short leash. Comes down underneath the 261 area. You move your stop down either right here to keep it real tight, 262, and you could have picked up a couple of bucks. Okay, so once it breaks and you notice that the averages haven't crossed, you got to keep it on a short leash because you're going against the major trend, and these averages have not confirmed any type of a cross like it did here. Then you got some action, right? But when they don't cross, you got to be concerned they're going to come right back in your face, which is what they did. Okay, another one here on the communication side would be, let's go with Activision, ATVI. You know, with all the kids at home, you know, obviously Nvidia with the consoles are doing great, and they're buying the games, and so you know, this stuff is definitely made out because of the COVID. And looking at the 1-year graph, let's take a look. As you can see, this thing got you long at 58 bucks, and you're riding the wave all the way up to 80. Not a bad ride. Look at that blue line. Boom, 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 boom. Get in there, go get some coffee, relax, let time go by, and let the market do its thing, right? Okay. Now, on a shorter term basis, what did the 5-day do for us? 5-day get us a sell signal up here. Let's call it around 82.80. You're going against the major trend. So as soon as it goes underneath the blue, you're assuming that it's not going to last. You move your stop down. So you're at 82.80, and now you're at 82. Not much money to be made fighting this tape, right? So you got to be careful. Right now, you'd want to be long with your stops underneath what? 82.20 or 81.80. Looking for further upside. Not a great day trade, not a great swing trade because the market underneath is quite firm at this point. You got to monitor this every day. Something changes. Another one in the communication sector is Disney. And Disney, let's see here. You know, they've got the theme parks they're trying to get people to come back to. They dropped the prices down to 49 bucks. They are trying to get people back in, and they're going direct to the consumer with their movies. So this thing went down towards 100, 115, and obviously it liked what it heard about direct to the consumer, and it likes the idea that they're going to get people back in the park by discounting the Florida residents and all that kind of stuff. They'll probably go national with that. At any rate, in the last 1 year chart, you can see that it is really one of the value stocks more that have not been able to go back to their highs. So if value is going to have a rally, and that's a big if, this thing could maybe go back towards the 150 level, which is where it came down from. You know, NASDAQ not only came back to where it came from, but it also took off further. Now, if the value is going to do this, Disney might be in that thing, and obviously, so that gives good potential. Now, let's look at the 5-day graph. And there you are basically, you know, right now it's a little bit on the sell side here, isn't it? So now this thing had a big run up here, and it's been coming down pretty steady. So this thing you could have been selling against the red line and the green line pretty much all the way. You got to peek through. But again, if the average is in the declining mode, you can speculate that this is temporary. And ergo, with all of this down action, it's still in a down. And it went all the way down to 126. So on a 5-day basis, this thing had a big jump, obviously. And then basically, you got the sell signal way up here at 131. And basically, you're still short this thing. Okay? Especially with the fact that the blue line, the green line, and the red line have never crossed. Okay? So from that standpoint, Disney still looks like it's on the down. If you're trying to do a very short-term trade, let's see if there's any action there. Yeah, it's trying to turn up. Okay, so on a short-term basis, it looks like it's trying to turn up. But again, these averages are still not crossed to the upside. So would you be suspicious? Sure. But if you're very short-term trading, it gave you the buy signal right when it crosses the red, 127.60, and you're up about 50 cents. Not a lot. Okay, let's move to another one, which is consumer discretionary, and of course, the big one there is going to be Amazon. I'm going to try to only do a couple of these things because time is going by, and I want to get to some of these things. Let's get the right symbol up here. Okay, Amazon. Everybody's buying on Amazon, right? All right, Amazon's up $7 today. It was at 3,300 and change the other day. I guess it didn't like the altitude and came back down. Let's look at the 1 year. Now, again, Amazon, is going to have more and more competition because that's what these people are doing with Target and Walmart. They're trying to get into a lot of the things that Amazon does. So that's a lot different than a year ago. But you can't beat the fact that they are the leader in the industry. But again, look at the RSI, way up here, and we've made all these highs, and the RSI is down here still. I like to see if I'm going to get negative on something, though. I want that RSI under 50. When it's above 50, it tends to be pullbacks or to be bought. When it gets under 50, then it's like an airplane that's losing altitude and the engine is weakening. So look at your RSI. When it's under 50 and you're negative, that's a better thing to be. Okay, so anyway, again, another rally here on this. So we know the big trend is up. We go to the 5-day. And what do we see? Got a sell signal here somewhere in the area of 3,300. Went all the way down to 32.40. You're going against the trend, right? And the averages haven't really crossed. So if you got in there at 3,300 area, you move your stop down to the blue line at 32.50, at least you pick up $50 a share. Again, now it's trying to get above this 32.90 area. If it fails and these two red and green lines do cross, you're in pretty good shape to play this thing from the sell side. Okay. On a day trade, let's see if we went on a 1-day, if there's anything there. My personal opinion is you can use the 5-day and day trade off the 5-day. And it's not illegal to take it overnight if you want to, if you think you're on the right side. Yeah, the day trade, not that easy to work with this kind of thing. 32.70, you got a little bit of a buy signal there. And right now it's at 32.74. So, and it's in between the lines. So it's kind of an unknown right now, undecided. But again, I did show you on the 5-day You get a little more action on it that way. Also in the consumer discretionary that was big is Home Depot. And they announced very good earnings this week, but the stock was not following through. Let's see what it's doing today. Home Depot. You know, they really knocked them and Lowe's, they knocked the cover off the ball. But where's the follow through? Is it a buy the rumor, sell the fact? It's looking like a buy the rumor, sell the fact, isn't it? I mean, we know the housing stocks have gone through the roof. We know that the builders are going nuts. We know the consumer has been home for a long time fixing up their house. That has pulled forward, and this has happened in a lot of stocks, that pulls forward a lot of the earnings because, if everybody in the last 3 months while they're home did all their home furnishings, et cetera, that's pulling forward all the stuff they would have done maybe in the fourth quarter. And that means that those numbers in the fourth quarter may not be as good as they are now because people have accelerated what they normally would have done later in the year or spread out throughout the year. Okay, but where are you here? On the 1-year graph, this thing has obviously been positive since $200, and it's up at 280. It's getting extended away from its moving average, and that's why it's probably pulling back. Now, did we get a sell signal of a decent size here on the 5-day? Let's find out. Yeah, not too shabby. Got a sell signal up here around 287 or so, right? The thing's trading at 281, and you want to keep it on a short leash. Your 287 short would be at what? You want to get that 282.74. Okay, if you want to keep it on a short leash. So, you still be up about $5, not too bad. And if it keeps going down, that would be good too. And you can see they're starting to cross. Okay, you can see they're all starting to cross. Okay, so on Home Depot, you're getting a little bit of action on that on a short-term trade, no doubt. Let's see, Tesla. Tesla's been going through the roof because they're splitting. And of course, there's a cult going on out there. And it's being a very, to be honest with you, it's a very respected stock because very large funds that are in the consumer discretion area, they have them in their portfolio, which tells me that some pretty intelligent, sharp guys believe in this thing. And it's not just, it's just not, speculation on things that don't make sense, which is some people think it's like that. Anyway, on the 1-year graph, let's see. How could you have ridden this train? Well, you could have rode it pretty good. The blue line got you in where? At $500. You'd still be in there. Not a bad ride. 300% on your money. All you had to do is buy when it crossed and what? Go get some coffee, let time go by, and let the market do its thing. Now let's look at RSI. You have a high point here, and you got a big new high there. Let's see if the RSI is not confirming that. That would be an indication that there could be a sell ahead of. Yeah, look at that. So the RSI over here is at 85. Now we're up at this big new high, and the RSI is at 73. You know what that tells me? Short covering, volume exhausting, and I'd be very careful. Why? Because look how far you are from the moving average. So after this split goes off the board, they could say timber. So you'd have to be careful. But look at the 5-day and see if there's any indication here. Yeah. So it's kind of flattening out. And again, it tried to get down, but look, that blue line doesn't want to give it up. I would say that if this thing starts breaking under 1880, that would be a little bit of a signal because these two things are crossing. And then, of course, if it got under 1860 and you can get these averages to cross over, then you could confirm that 1880 to 1920 was a sell zone. But right now, it's a little bit too strong to be stepping in front of. But again, it does look with the RSI weakening and the new high and these things crossing, I would definitely be watching this closely because as you can see from the graph, it's a long way from its moving averages. And September and October, if the markets change their tune, this might be one that gets hit a little bit because it could be ahead of the game. Okay, so that was Tesla. And let me give you one more here on Target because that's a big one. It just jumped up big time. Let's see if it's still following through or if that was just a bunch of, shall we say, order imbalances. When they come out with earnings and 9 million people want to buy into a stock, the guy on the other side of the trade he sees all that volume. He's not going to just keep the price at the same level. He's going to raise the offer as high as he can and take in all that volume under the concept that after that volume is done and there's no volume behind it, it will fall back down under its own weight. I don't know if that's happening with target, but they came out with the kind of earnings that made people all want to buy, and the stock jumped up about 12%. Well, every buyer's got to have a seller. So somebody was selling it when it's up 12%. Who got the better deal? Well, for today, the guy who sold it looks like he got the better deal, but that could be temporary. Let's take a look at the 1-year graph. But just remember that when everyone is selling, like in March, somebody's buying. And when all that volume of selling dries up, there's no more selling to be done because it's all done. Then obviously the market can snap the other way because the volume is done that way. And then after a big tank job, you've got short covering, you've got spec buying, all kinds of things. With regards to big up move, you've got people who are going to short, people who are going to hedge, that kind of thing. All right, so here you go. On the 1-year graph, I mean, is that thing extended off its moving average? Just a little bit, right? So you're up here in the ozone. Let's see what the RSI did. Probably made a new high, I would imagine. Yeah. So the RSI did make a new high here. With that kind of power, it's going to do that. Now, will it just keep going, or is there a sell opportunity here? Let's look at the 5-day. Not selling opportunity yet, okay? But, if you're an aggressive trader, you look at this red line. If you get it to start rolling over a little bit, then I might be interested in doing it. But that's a big gap between 138 and 154, and it is extended on RSI and everything else. So while this is a great company making great money, it is extended. But I wouldn't step in front of it. There's no indication to do that. So you'd keep an eye on the 5-day, and I would keep an eye now on a day trade. Let's see if there's anything there. Yeah, on a day trade, it's rolled over a little bit, but again, the 3 lines have not crossed. So if you did sell the thing at 154.40, you're a little bit to the good, but I'd put the stop right down at 154. I wouldn't stay in here too long. But if I'm in a day trade, it's a sell underneath here, but a very much, put a very tight leash on this thing. Okay, let's go through some other sectors and try to go fast so we can get as much in as possible. The next one is going to be consumer staples. And looking at that, let's look at Costco. Okay, Costco obviously is a darling. And with everybody hunkering down, they've been loading up on things. So let's take a look at the 1-year. Okay, so again, extended from its moving average, but definitely in an uptrend. And it's been going pretty good since about 305. It's up at 339. Okay, now let's look at the 5-day and see what's going on there. Yeah, 5-day gave you the sell signal up around 341. Hasn't crossed, so obviously you got to keep it on a very short leash. And so there's not much happening there. But right now it does look like it is rolling over a bit. But I wouldn't trust this thing on the sell side right now because these averages haven't crossed and the trend is up. So I'd keep it on a short leash if I got any sell signal like I did right there. All right, Costco, very strong. All right, let's go over to the energy area, okay? And on energy, let's take a look at Chevron. Okay, Chevron has had, it's off a little bit. It's had a very big run. We were very, very positive on Exxon down there and also on Chevron because obviously when oil went minus $37 a barrel and everyone uses it and you hear that the rigs are being closed and fracking's going out of business and OPEC is cutting, that's not a time to be short energy. That's the time to get in. But we've seen a big move already. So what's going on now? On a 1-year graph, let's take a look. Yeah, on a 1-year graph, this thing is starting to roll over a little bit. It's got some descending ideas here. This is a support in here around 80, but it didn't like the altitude at 100 for sure. That's the June highs, and it has not been able to go back towards there. You get this baby above 95, then of course it could be turning up again. So be careful, to not get too negative on it because longer term, our opinion is that oil will be going higher because demand is going to be very strong, particularly with people not flying. Now let's see on a short-term basis, can we get on this? Have we gotten on the sell side of this thing? Let's take a look. Yeah, they all crossed the perfect sell signal right there. And where are you here as far as that's concerned? You are at the price of about $90.50. So you've shorted this thing at 90.50, and if you want to keep it on a short leash, you keep it on that leash right there, and your stop would be at 86.59. So there you'd pick up about $4. Nothing too wrong with that. And of course, it hasn't crossed it yet, so you don't know if there's more to come. But again, this one, if you wanted to give it more room, you could give it all the way up to 88.50 because, again, the moving averages are indicating that it's downtrending, unlike what? The other stocks we've been looking at. So that looks like that. And that's probably pretty similar to most of them. Kinder Morgan has exposure to the natural gas market, which I happen to be thinking, well, we've been thinking that it's quite strong lately. Let's see if Kinder Morgan's chart looks much different. Okay, on a one-year basis, where are you? On a one-year basis, Kinder Morgan. And of course, these things do pay a pretty healthy dividend. Yeah, again, similar, they're all going to probably look similar. There you go. It's negative, and it's holding on for dear life. And on the 5-day basis, you've already sold it, and you're looking to see if it'll follow through. Let's take a look if there's possibility on that. Yeah, so you got the sell signal up here, 1440 and 1445, and now you'd have your stop in there at 1419, and you're looking to see if it might keep going down. Again, the averages have all crossed, so that's not a good thing. But again, you got to keep things on a short leash when you're doing short-term trading. Okay, let's turn towards the financial. Everybody's in this JP Morgan. Let's talk about JP Morgan. JP Morgan, everyone's favorite banking stock. Let's take a look here. JPM, there you go. And we'll take a look at the one-year graph and get an idea of what it's doing here. Okay, the one-year graph on JP Morgan. Now, similar to Disney, these are some of the ones that have not gone back to their 52-week highs. So if there is a true turn in this market, and it's not just based on tech and COVID favorites, then these could play a mean game of catch-up. And that's what people, when they talk about value, you see all this real estate up here to 135, the darn thing's down at 197. But it's having a hard time getting out of its own way. It tried to go up in June, didn't happen. Tried to just go up recently, didn't happen. So that's not really encouraging right now. But if you started to get above 100 and stay above 100, and then take out this 105, now you're in the ball game. So be careful if you wanted to sell this thing, because if it does start getting above 100 and 105, this thing may have some legs. Okay, now having said that, what's the 5-day telling us? Probably got a short here above 100. Yeah, there you go. Got you short here at 102.50. You're riding the thing down. Look at that blue line. Down, down, down. You tried to cross it. No way. Tried to cross it. No way. And then down, down, down. So you got short this thing around 103.50, depending upon 103, something like that. And you're still short the thing, and it's at 97. Okay. There's your stock, your big bank stock. Let me see if there's any other thing that I thought it would be. How about the regional banks? You know, people have been jumping on regional banks. Those are the small community banks. Some of them have come back pretty good. TCBI was one that I was very focused on. We were very focused on down there in the 20s. It's up in the 30s, actually even in the 17, 18 area. So they've had a good run. But let's take a look at the regionals if you used a basket in the ETF. This is a basket of regional banks. And the one-year graph on KRE, which is the ETF for regional banks. As you can tell, very similar to JP. Went up in June, looked like everything was going to be great. Not so. Tried to get out here recently. Not so. But again, you get back above 40, then you take out 42. A lot of real estate up here. So if the banking sector is going to be good, and what would make it good? Rates go up a little bit. People do refis. They have other ways of making money. And then, of course, they've overcompensated maybe for loan losses, which means they've got a ton of dough they took out of their earnings in the first half of the year that they may not need if the economy and the defaults and all that stuff don't come around. So keep an eye on this. But right now, to give you an idea on a 5-day, I'm sure it got you short in the 40s. Let's take a look. Yeah, get you short up here at 40.60. And now if you want to keep it on a short leash, you can put a stop at 49, and again, is still languishing in the 38s. But again, on a longer term basis, again, this thing could be a turning point if it can get above those numbers. If not, the sell side is the way to go. Okay, that's the banking sector. Let's go to industrials real quick, and let's see what UPS looks like, because UPS has been doing unbelievably well. I think they're using holiday rates with FedEx in them and taking advantage of all these deliveries, because nobody's leaving the house. They use Postmates to get their food and Grubhub and all that kind of stuff, and then if they want to buy anything, they're doing it over the internet. But the question is if we get a vaccine and things change, will that change all this? And that's the problem. If you're buying into an environment that does not last as well, then obviously you could be overpaying. Let's look at the one-year graph on UPS. Okay, yeah, that's obviously very, very extended. So you got to be careful buying anything that's that far away from its moving average, right? Again, September and October could be a different environment than now. So after Labor Day, it might change. If it does change, this stuff may correct. Okay, is there any sell signal on the 5-day that you could take a shot at? The main highway is clearly up, but it's pretty far down the road. All right, so this thing is giving you a little bit of a sell sign here on the 5-day between 160, 161. Market's trading 160. Would you keep this on a short leash? Absolutely. Did you get a nice little down though? Sure. If you got in there at 160, 160, 50, you got to drop all the way down to 157. You want to take $3 out of the market, you could have done it. But then it's right back in your face. And it's right back in your face because the major trend is up. But it's back in your face maybe for another sell opportunity if it can't get above these areas right here. Okay, so there's your UPS. And I'm sure FedEx is a fairly similar situation. All right, let's take a look at Boeing. A lot of people are looking at Boeing, and that's part of the industrial sector. Okay, 1 year on Boeing. Let's start out with the 1 year because we want to know where the main highway looks. And the main highway on Boeing is probably all over the place because it went way up, then went back down. These guys have negative sales, so but they have a big contracts with the U.S. government. But as you can see, it's definitely part of the value trade, nowhere near where it came down from. Had the rally, just like everything else in value in June, came back down. That's a pretty anemic attempt to a re-rally, isn't it? And now you're back underneath here at 167. So I'm sure we probably got another sell signal here on the 5-day. And on the 5-day, you got the sell signal on it at, way up here at 178. So you're selling this thing at 178, right? And bam, you're still in there, you're still in there. And if you want to keep it on a shorter leash, 178 and cover it if it hits 169.90. And you got a nice little ride for your money. When they move, you're going to, obviously the market can make you money. If it's choppy like some of those other ones and they don't have much of a range, then, obviously there's nothing to do with that. How about something in the tech area like Nvidia? Okay, on Nvidia. 1 year graph is going to show that you have a bottle rocket here. And let's see if you could have rode the train just by using a simple moving average. Yeah, not too shabby. You got in there at 260, right? 260. And has it ever violated? No. So you what? You bought 260, you went and got some coffee, you relax, you let time go by, let the market do its thing, and 260 has turned into 480. Not a bad ride. Now that's pretty darn extended. Let's see what the RSI looks like. Yeah, the RSI is not exactly confirming the move that much. RSI is at 74 and used to be around 74. So it's a similar RSI, but the market itself is what? RSI was around the same as it was here, and now you're $60 higher. That's not a good sign. That's a sign of exhaustion and possibly short covering. All right. Now, having said that, and you got a high point surrounded by lower points. Let's see if there's a sell sign here, because this thing could obviously have some pullback because they've already announced their earnings. And let's take a look. In other words, their good news has been released. Okay, so you got some selling here at 492, and then of course it went down here to 478, So you got a nice little ride here, and then it's come back up, but these averages seem to be crossing, right? The blue line's still good though, but as long as it's under 490, and if you can break back under 484, I'd respect the sell side of this thing. Okay, but this is definitely a keep it on a short leash deal because these people have made a lot of money with the consoles. They're making a lot of money with the games. They're involved in the Bitcoin thing. So obviously there's a reason why it went up, but you know, the trees don't grow to the sky, right? Okay, let's look at a couple other ones in that space. And these are the ones that took advantage of Intel's problem when they had a delay on one of their chips. The two of them I'm going to be talking about here is Taiwan Semi, and the other one's going to be called AMD. So let's see if that bloom has come off the rose. And we'll go to the 1 year graph. It's going to show you another rocket ship. And that is a rocket ship. But as you can see, that's why you're trying to look for places to sell, because I'm sure that the RSI probably did not confirm that. So you had a bunch of highs here. Yeah, look at this. The high was made, and look, the RSI totally was not confirming the next high. So look, you had a high point here. Then you had another high, not confirmed with RSI, very lagging. Again, that can mean short covering. That can mean exhaustion, volume-wise. And then what happens? It falls under its own weight, particularly when it's this far away from its moving average. So where did this thing get us short? This thing got you short initially at 80.50. And basically, it also got you on the sell side. I went across the green line at 79.50. And so you know, they've all crossed. So basically, you're short this thing, and if you want to keep it on the short leash, your stop would be at 78 bucks. And of course, there's a gap there, so it may come back and get you. But the bottom line is right now, you're riding a pretty good train to the downside with all three averages crossed. Now, the blue line is pointing down a little bit, but not tremendously. But the green line and the red, they're definitely pointing down. Again, don't forget, Intel's situation is delayed. It's not expired. Another one that made the big move was AMD. And AMD, we're going to hit the 1 year graph. It'll show you another one that went through the roof. Again, the Intel situation, you know, is not permanent. They are going to have that thing at some point. Again, your RSI totally lagging, right? And your market is very far above the what? The moving average. Can you see that? 85, almost 90, and the averages are down at what? 70s and 60s. Okay, let's look at the 5-day, see where you got the signal. The red line crossed where? You got a red line cross right here, and that would be, let me get off this thing so I can see, 8240 area. And so that gave you a bit of a sell signal. All three have dropped, although that blue line obviously is very flat, but you can see it's having a hard time getting through the blue line now. So if this thing started trading under 81 and 80, then you could get a pretty good drop down. Otherwise, you'd have to keep it on a short leash and not much to get here. 82.20, and if you put it right here at 81.80, there's not much room there. So this one here, you might be better to see if it can start taking out 81, 80, 50, and 80 and jump on that train once you get the train moving in the direction you'd like, if you'd like it to drop. Okay, and Intel is the last one I wanted to show you in the tech sector because, again, they just announced a $10 billion, I think it was, a buyback of their stock. So they obviously think it's cheap. And it was in the 40s. Let's see where it is now, because the 40s sounded a little cheap, but it's back in the 40s too. So let's see what goes on here. We'll go to the 1 year. Again, that delay on that chip was just a killer for these guys. It opened the door for Taiwan Semi and AMD, and it put these guys into the soup. This thing was trading up in the 60s, and it went into the 40s. So that's a pretty good hit. So anyway, you popped up a little bit here. Yeah, that's when they announced it, 52, right? And then it's been having a hard time still. That's a big gap, but that's a downtrend. Okay. But if they're going to, if they're going to change their stuff, this could be another situation. And again, most of these tech stocks have taken off, and this thing is still way underneath its 52-week high. So what's the 5-day? I'm sure it got you short. Let's see if you're still short. Oh, no, actually the 5-day would have gotten you long, because here's the way the trade would have worked on the 5-day. It gave you the sell signal after it had the big run up. It gave you the sell signal at about 49 bucks, and you got to move down to 48. Not much there, but it popped above. Okay, it popped above on that breakout, and basically, so it's still showing you a little bit of a long here. But again, if you are long it and you do believe in it on a short-term basis, again, that 48.90 area or 48.70 area, that's the area that you want it to stay above if you're playing it from the long side on a short-term basis. Okay. All right. That's your tech sector. Give you a couple there. Let's look at Apple because Apple, again, is trading 34-1 PE, and it really has revenue and sales growth that has been very, revenue and earnings growth, which has not been that great. And the stock has gone through the roof because it is split. And also everyone's counting on the 5G to just be this enormous thing. So talking about, accelerating or pulling forward your sales, iPad sales and all the different different products they have definitely gotten a big spike during the COVID. And again, they could be using up, gasoline that they would normally have later in the year. And they did say that the i12 is going to be delayed. So they don't know exactly when that'll come out. They hope it'll be in before Christmas. But if it's not, that could be an Achilles heel. Anyway, if you look at the 1-year graph, this is the thing that just keeps giving. But again, they don't have, they didn't even have unit sales grow. The way they had their revenue grow was through hiking prices. So their unit sales aren't that growing. Their earnings and revenues, if you take away the tax cut and you take away the buybacks, it's a different situation. So you got to be careful when something goes up like this. But again, it went from 260. And again, if you just went on a vacation and let the thing run, 260 is now turned into 467. But is it extended off of there? Yes. And has it been a beneficiary of the split? Yes. So basically, you got to be careful. And is there any indication that this thing could roll over? Well, probably not before they have this split, which is coming up in about a week or so. Here you go. So where would you possibly be able to say this thing might be turning over? Because even on a short-term basis, it's been fairly much to the upside. If you thought it might be turning over, you'd need to at least get it under 466, and then 464, and then 462. But these averages are very strong to the upside right now, and they've got that big event coming up. So right now, it's tough to stand in front of it. But once this split occurs, is it going to be buy the rumor, sell the fact? I'd be watching it very closely because there's a lot of people in this stock, and it has a 0.06% short interest. So if and when the split, when the split happens, watch it very closely because that might be a situation where if it rolls over from there, a lot of people might want to take some of these gains off the table. We'll have to see. All right, we're coming up with only a few minutes left, so I'm going to jump ahead to some commodities real quick because we have gotten some fabulous signals out of those. The gold price, let me give you an idea on there. Let's just show you there. Yeah, gold basically on the 5-day gave you a sell signal here at 2010, and look at on a short-term basis what kind of a drop you had. Say you have 100 ounces this on every contract, you get the sell signal up here at 2010, and this thing dropped recently down to 1930, and I think last night it hit 1930. That's what, 80 bucks? That's $8,000 of a move in like a couple of days. So this one on a short-term basis clearly was a darn good one, and again, surprises a lot of people. But when that interest rates, when the yields start rising, it makes the dollar a little firmer, and all the people that have run in there, very crowded trade, and crowded trades sometimes go the other way. All right, so that was the gold. Let's just take a look at something else, which is the agricultural sector. Will China be buying the grain? Let's take a look. They're supposed to do some more buying between now and the end of the year. Whether they're going to do that or not, Lord knows. But the soybeans have been trying to turn up. Now they've turned back down again. So the soybeans, they gave you a good rally from the 890 area up towards 920. and now they've rolled over on a short-term basis to the downside, giving you a sell signal at 914, and now they're trading at 906. So on a short-term basis, they gave you a good sell signal. How about crude oil? A lot of you guys like the crude oil. Let's talk about that real quick. And crude oil has been in a tight range, so I wouldn't imagine there's too many day trades here going on. But no, you got something here. You got a pretty good one here. You're going choppy, 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 right? So that's why this is a rough racket, because it's giving you buy and sell, buy and sell. This is what you don't want to see. But you did get a recent sell at around 42.60, and it dropped a buck for you. So you did have one trade here where at least you can pick up $1 a barrel. But again, that's very choppy, and that's really not what you want to look at. You want to try to get smooth markets that are trending, even on a 1-day or a 5-day basis. And oil, has not been a great one for that. Two other ones. This is one that came to our attention, and it looked like a pretty good one. And this is sugar. I think you're going to see.
Hey, Jim, sorry to cut you off, but yeah, we're almost out of time here.
Okay, top of hour. Okay, very good, guys. I just wanted to go over a whole bunch of different markets and show you a little bit about buy and sell points using the averages that I look at and also the RSI. I'm going to close it out by just inviting you to get the Option Professor Weekly Market Update, where I cover a lot of information on all the markets that we just talked about. And also, you can email us and ask questions on anything specific that you might have on your mind. The way you get the weekly newsletter free of charge is simply go to the website, optionprofessor.com, and then basically put in your email. Once your email's in there, every week you'll get the free update. Okay, thanks a lot for being here, guys. I tried to do as much as I could, probably too much, but thanks for listening, and go to optionprofessor.com to get that free weekly update. Okay, David.